Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Khairuddin bin Khawari. Question 1A. Bocentric Berhad is the parent of a Miskin Berhad and Acquisite Berhad, which they are the subsidiaries. The appropriate accounting method to record the investment is acquisition. Bocentric Berhad acquired 80% of the ordinary share on 1st January 2016, and the NCI is 20% of Acquisite Berhad. The debentures is 25% and the NCI is 75%. The market price of the share was RM1.40. Next, for Miskin Berhad, Bocentric Berhad acquired share of 60%, which is acquired on 1st March 2018, and the NCI is 40%. The payment was made by two methods, that is cash and by share.
Assalamualaikum. My name is Muhammad Firdaus bin Kamaruzaman. So I will present on the question 1B, which is to compute the goodwill and the bargain purchase of acquisition of Acquisite Berhad and Miskin Berhad. So for the Acquisite Berhad, in acquisition of ordinary share, the consideration transferred will be added up with the NCI. So in order to determine the NCI amount is 20% times with the 200% times with the RM1.40. So the amount will be 56,000. And then this amount will be deducted with the fair value of the net asset at the date of the acquisition, which comprises of ordinary share, the general reserve, the ARR, which is leasehold property, and then the last one will be the retained profit. So the amount of goodwill will be 18,000. Since there is an impairment information additional at the questions, which is 10%, so this amount of goodwill need to be deducted with this impairment amount, which is 1,800. So the amount of the goodwill of the Acquisite Berhad for the acquisition of ordinary share is 16,200. Next, to calculate the consideration transferred for the Miskin Berhad, the amount of this consideration transferred comprises of two, which are the cash and the contingent consideration. So both of these amount need to be added up with the NCI amount. So this NCI amount need to be calculated with RM1.25, multiply with the 40% and multiply with the 400,000. So the amount of the NCI will be 200,000. This amount need to be deducted with the fair value of the net asset at the date of acquisition, which comprises of ordinary share, the general reserve, the ARR for the brand, the retained profit brought forward, and the last one is the current profit. So the amount of the goodwill for the Miskin Berhad will be 104,600. Next, for the question C, to calculate the non-controlling interest, we need to compute the NCI in Acquisite Berhad and a Miskin Berhad, which are 56,000 and 200,000 respectively. So both of these amount need to be added up with the post-acquisition of the ARR in a Miskin Berhad, which is 12,000. This amount also need to be deducted with the impairment loss, which is 360, and then plus with the post-acquisition of the retained profit of the Acquisite Berhad. The post-acquisition of the retained profit of Acquisite Berhad is 37,480. So this amount need to be allocated between the holding and the NCI. So the percentage of the NCI is 20%. Thus, the amount that need to be added up is 7,496. Next, this amount also need to be added up with the post-acquisition of the retained profit of a Miss Skin Berhad. The post-acquisition is 29,600. So this amount also need to be allocated between the holding and the NCI. So the percentage of the NCI is 40%. Thus, the amount that need to be add up is 11,840. So the amount of the NCI is 286,976. Next, to calculate the group retained profit, the first one is the retained profit of the View-centric Berhad, which is 194,800 need to be add up with the debenture interest received for the Equisub Berhad, and then it needs to be deduct with the realized profit of the inventory, the ordinary dividend payable, the finance cost of the contingent, and then the last one is the impairment loss. This amount need to be add up with the post-acquisition of the retained profit of the Equisub Berhad, which this amount is allocated for the holding, which is 80%. So this amount the amount that need to be add up is 29,984. So this amount also need to be add up with the post-acquisition of the retained profit of a Miss Skin Berhad, which is 17,760. Thus, the total amount of the group retained profit will be 154,464.
Alright, so moving on to question 1D. So what we would need to do is prepare the consolidated statement of profit or loss for 31st December 2018. So what we're doing here is the basics. We would need to do the sample again, but this time consolidated. So first of all, we would have the revenue at the top. So we, as you can see to my right, the revenue, which would total up to 1.995 million, and then we would subtract it with the cost of sales, totaling to 1,305,710, which would total up the gross profit of 689,290. Alright, so moving on to the next step, we would need to add the revenue and subtract it with the expenses. So as you can see, there are rental income, expenses, impairment loss, amortization of brand, depreciation of leasehold property and plant, interim ordinary from Exquisite Berhad, debenture interest income from Exquisite Berhad, dividend from other investments, finance costs, contingent consideration, debenture interest, redeemable preference dividend, and that after we do the relevant necessary addition and subtraction, such as the internal company transactions and all that, we would arrive at a profit before tax of 185,590. Alright, and then we would need to subtract it with the taxation of 73,500, and we would get a profit after tax of 112,090. And not to forget, we would need to include the other comprehensive income. So the other comprehensive income that we have in this video, in this question, we have surplus on ARR from Amazkin Berhad, which total up to 30,000, and then we would get a total comprehensive income for the year of 142,090. And not to forget that we would also need to calculate the profit after tax of the NCI. So what we would need to do for, let's say, for the first subsidiary, Exquisite Berhad, we would need to less back the depreciation of the leasehold and add back for the depreciation of the plant, and less back the redeemable preference dividend, and that would total up to 3,580, and then we would need to times it with the percentage of the NCI, which is 20%, and we would arrive at 716. And to that total, we would need to add the less back the impairment loss, 1,800, and times it with the 20%, we would get negative 360. So we're not done yet over there. We would need to calculate the PAT, the profit after tax of Miskin Berhad. So they have an amortization for the brand, which is 400. You subtract it from the 30,000, you would get 29,600. And from that, you times it with the NCI percentage, which is 40%, you would get 11840. And from that total, we would get 12,196. And from there, we can calculate the profit attributable to and the total comprehensive income attributable to. Okay, so now we move on to question E, which is prepare the consolidated statements of changes of equity of Biocentric Berhad for the year ended 31st December 2018. Okay, so we start with me showing you the schedule for the statement of changes in equity for the year ended 31st December 2018 of Biocentric Berhad and Group. Okay, so basically what you can see in this schedule, okay, for the balance brought forward, it can be found in the statement of changes in equity for the year ended 31st December 2018 that was provided in the information in the question. Okay, so for ordinary share is 1 million. The retained profit of 130,570,000 can be found in working 2. And also the non-controlling interest of 63,980,000 can also be found in working 2. So let me explain on working 2. Okay, so this is the schedule for working 2. So okay, so working 2 we would like to find the group and also the NCI. Okay, for that we have to find the subsidiaries first, which is the first subsidiary of okay, so what can be found in the working 2, okay, through this schedule is firstly we would like to compute the retained profit brought forward of Biocentric Berhad, which is the parent company. So the retained profit that can be found is 99 million, which can be found in the statement of changes in equity as at 31st December 2018 in the question. And also you will have to less the unrealized profit for the intra profit earned through sales with Exquisite Berhad, which amounts to 350,000. So you have to less with that amount. Okay, that is all for the retained profit of Biocentric Berhad. For the retained profit of Exquisite Berhad, okay, the amount is 54,100,000. Also can be found in the statement of changes in of equity of Exquisite Berhad as at 31st December 2018. Okay, the first one is based on the information that we get from the introduction, not from the additional information. We will find a depreciation of plant, which is the 2 million. You have to divide by 10 years, which we will get 200,000. So you will have to add that number. And also for other amounts that you will have to less includes depreciation or under depreciation of leasehold property, which is 17 million less by 12 million, and then you would have to divide by 25 years. And because the leasehold property is bought on the 2016, so and we are recording for 2018, so you have to multiply it by 2. So the amount is you have to less 400,000 ringgit. Okay, and also you will have to less the unrealized profit for the plant, which is 2 million. And also you have to less also the pre-acquisition that can be found in the introduction, which amounts to 12 million. Okay, after you have less 54 million 100,000. You add and less all of this, you will get an amount of 39,900,000 ringgit, whereby you will have to split it into two for groups and also NCI. So since Biocentric Berhad owns 80% of ordinary shares of Exquisite Berhad, so it's 39,900,000 ringgit times 80%, which is equals to 31,920,000 ringgit. You will put it in the group column, and for the other 20%, you will have to put it in the NCI column, which amounts to 7,980,000 ringgit. Okay, and so you will also add the NCI on the acquisition date of Exquisite Berhad, which amounts to 56 million. Okay, and so the total for the group, as you can see, is 130,570,000, and also for the NCI is 63,980,000. Okay, so that is all for working 2. So and then also, because Biocentric Berhad has also acquired another entity or another company called Skin Sdn Berhad on the year, so you will have to record acquisition for the year. So acquisition for the year for non-controlling interest can be found in working 3. So in the this is the working 3 schedule. You will start with the Skin Sdn Berhad of ordinary share or general reserve, ARR, which is the brand, which can be found in the introduction, and also the retained profit of 75 million. Okay, so basically, because Biocentric Berhad owns 60% of the ordinary share of Skin Sdn Berhad, so to count for the NCI, it's 40%. So you will have to multiply 40% with all of the amounts that I have said before. So for the ordinary share, 400,000 times 40%, general reserve is 10,000 times 40%, ARR for brand is 2 million times 40%, retained profit, which is 69 million, plus another 6 million, which is the current profit for before the acquisition, which is on January and February. You have to times with 40%. So the total amount will be 194,800,000, and you will have to add the goodwill that we have calculated earlier on of 5,200,000 ringgit. So you will get 200 million ringgit. So what we will get is, basically, if you want to check your answers correctly, you can do so by calculating the market price of the ordinary share. You divide by the ordinary share unit amount, and also the market price, you multiply with the ordinary units amount, and you also multiply the NCI amount, and you will also get the 200 million ringgit back. So that is how you check your answer. So that is for working 3. So working 3 will go to the acquisition during the year under a non-controlling interest. Okay, so the profit for the year you can be found in SOPL, which is we have calculated earlier on, of 99,894,000 and also 12,196,000, and then also surplus on revaluation, and also ordinary share dividend ordinary, which is 50 million plus 26 million, which is 76 million you can find in the retained profit. So the bottom line is the balance CD for ordinary share is 1 million, retained profit is 154,464,000, the general reserve doesn't change, 30 million, ARR is 68 million, and the NCI is 286 million and 976,000.
Moving on to question F, prepare the consolidated statement of financial position of Biocentric Berhad as at 31st December 2018. So for the answer, we will use RM1000. As usual, we start with the non-current asset, which is the first one is property. We take all the figure given from the question and then add with 30,000 for adjustment for additional information number 1, which is ARR for property of Skin Berhad, and then plus with 5,000 for adjustment for leasehold property of Exquisite Berhad, and deduct of depreciation of leasehold property amounted to 600. So the total of property is 7,093,400. Next item is plant and machinery. We have to deduct the unrealized profit of the sale of plant amounted to RM2,000 according to the additional information number 5, and add 400 for adjustment of depreciation. So next, for other investment, there is no adjustment. For goodwill, we have to include the goodwill for acquisition of ordinary share and debenture in Ecosat Berhad, and goodwill for the acquisition in MS Skin Berhad. And then for the intangible asset, the amount of 2,000 have to deduct with amortization of amounted to RM400. And next is the current asset. First one is inventories. We have to deduct with the unrealized profit of sale of inventories amounted to RM4,000 and 640, and plus with the good in transit amounted to 3,200. And next, for the bill receivable and trade receivable, we have to deduct of amount of intra-good transaction. And lastly, for bank, we have to add cash in transit amounted RM3,000. So the total asset is RM2,316,720. Moving on to equity and liability. For ordinary share, we only take the amount of parent only. For amount of group return profit, group general reserve, group asset revaluation reserve, and NCI, we have calculated in previous schedule. Next is non-current liability. For 6% redeemable preference share, there is no adjustment. For debenture, we have to deduct the amount of parent amounted to 5,000. Next is current liability. Debenture interest payable, we have to deduct 400, which is intra-company transaction. For contingent consideration, we have to add 32,400 since it will be payable by March. And lastly, for the ordinary dividend payable and redeemable preferred dividend payable should be included since parent not recognized in the previous statement. So total asset and liability is 2,316,720, same as the asset above.
So, question 2A, explain briefly the meaning of joint control as specified under MFRS 11 joint arrangements. Okay, so based on MFRS 11, paragraph 7 states that joint control is the contractually agreed sharing of control of an arrangement which exists only when decisions about the relevant activities require the anonymous consent of the parties sharing control. Okay, and then for paragraph 8, an entity that is a party to an arrangement shall assess whether the contractual arrangement gives all the parties or a group of the parties control of the arrangement collectively. So all the parties or a group of the parties control the arrangement collectively when they must act together to direct the activities that significantly affects the returns of the arrangements, for example, the relevant activities.
Okay, so to answer that question, YESA is a separate vehicle with its own legal form. However, the legal form does not confer separation between the parties, Delta and Global. And the separate vehicle, as a result, it is Global's and Delta's property. So the rights and the assets of obligation of liabilities of YESA is also is Delta's and Global's Berhad's. So therefore, the arrangement is a joint operation.
Accounting treatment based on joint operation is stated on MFRS 11, which in this case, the parties or joint operators are Delta Berhad and Global Berhad. The parties have right to the asset and obligation for their liabilities. They also recognize their share of asset, liabilities, revenues, and expenditure in accordance with the contractual agreement.
So for the question 2B2, assuming that YESA Berhad has the right to its asset and obligation for its liability, will there be any different to its accounting treatment? So the answer is yes, there's different in accounting treatment. When YESA Berhad has the right to its asset and obligation for its liability, the arrangement is not joint operation anymore, it is a joint venture. For the accounting treatment referred to MFRS 128, the joint venture Delta Berhad and Global Berhad will recognize its interest in Yazi Berhad as investment in joint venture. So the accounting for investment will using equity method.
For the question 4, it asks, in what situations can the investor hold control over the company even if they held less than 50% of the holding interest? So the first situation is the investor must has the contractual agreement with the other investee, and then the second one is it has control over the board of directors of the investee, and then the third one is it has a potential voting rights which may increase its voting power over the investee, and then the last one is that the investor must be the single largest shareholders in the company, and the number of shares are held by numerous of the investor.